I'm actually quite privileged to be here because I'm the only speaker outside of Zoho. So thanks Sridhar, and I'm really privileged to be here. Before getting on to the point of what my presentation is about, let me just for 2 minutes talk about what is Wingify. So like Sridhar said, I started Wingify soon after I graduated. I graduated from Delhi College of Engineering in 2008. And I started in 2010, bootstrapped just like Zoho. And I must say a huge inspiration comes from Zoho and other bootstrap companies like Zoho. We have about 3,800 customers across 80 countries. Right now we are on an $8 million run rate. We make a single product so far, and it's a market-leading A/B testing product. In fact, A/B testing is the methodology which you use to continuously, rapidly iterate and improve your website and apps. This is the same philosophy that has been displayed by a couple of other speakers here, where the whole Zoho philosophy is about continuously and rapidly learning and improving. And that's what we offer, Visual Website Optimizer. Just you can improve your website without knowing any coding or HTML. So that's Wingify. Now, to give context of this presentation, I actually went to Silicon Valley a couple of months back, and I went there with great hopes and ambitions. So the reason I went there was to meet with VCs, venture capitalists, and other investors, not from a perspective of needing to raise money. We never needed money. We have been profitable from day one since I started in 2010. But I went to meet with VCs just to have a chat with them, just to take a reality check on what they think about the market, what they think about the product. And of course, I would be lying if I were to say that I wouldn't have taken money if it was a very good offer. And that's what the initial expectation was, to have a dialogue. So like I said, I met with a couple of VCs, and in the process, I understood what the Silicon Valley formula was about. And that's what I'm going to talk about. There's a huge contrast between how we've been building Wingify versus what I learned the Silicon Valley companies operate like, and how our life would have changed if we had raised funding. And I also went there to kickstart a very small US office, that too a completely enterprise sales office, a very small one, say a couple of people, and of course there was a conference. So what did companies think about Wingify? And by the way, I met investors who have invested in companies like Facebook, Google, Yahoo, and all top tier VCs. You name a top tier VC and I would probably have met them. And all of them thought that we have done something truly incredible, and that too everyone was amazed how we did it in 4 years. In fact, this is a verbatim quote of a venture capitalist who said, I never imagined that a team based out of Delhi is able to make a multi-million-dollar business ever without raising external capital. And some VC said, hey, suddenly we have a real business, because in Silicon Valley, if you read TechCrunch, where 30 startups are launching every day and multiple startups are getting funding every day, all of them are built on great hopes of the future, while today, like again in previous sessions, we have seen all of them have just nowhere, no clear paths to profitability. So there's considerable hype that VCs in Silicon Valley just continuously get pitched on. And when I went there talking about Wingify, 4 years, solid profit, solid revenues, they were quite happy. And again, not just from a business and historical perspective, of course, people invest in businesses because of the future. And in fact, businesses are never about past, it's always the potential. What you're doing today is just completely dramatically different from what you would end up doing 10 years. Zoho is a great example for that.
I want to interrupt. This guy what he has built is truly incredibly awesome. It's in Silicon Valley, not even 1 out of 100 companies would have the metrics he has. Not even 1 out of 100. Not even the companies who have raised 10, 20, $50 million. Give him a round of applause, please. Huge applause. He deserves a huge applause. So.
Thanks, Sridhar. It's quite humbling. So a lot of VCs were ready to invest. We had the verbal offers from a number of VCs, and In fact, this is not just because I went to Silicon Valley. I must say that since the time we started 4 years back, I may have met with all the VCs in India, and all of them are just considerably interested in raising funding. In fact, it came to a point that I had to stop saying, I can't meet you. It's just the 1 hour or 2 hour that goes into meeting VCs. I ultimately stopped finding that a lot unproductive, because there was clearly no intention of raising funding. So why meet? So in this whole process of meeting with several investors, and not just meeting with investors, I also met with companies in the Silicon Valley that had raised funding, because this was a hugely important event for us if we had taken funding. I wanted to know how companies that have raised funding operate after the investors come on board, and especially in Silicon Valley. And to contrast that, I also talked to a few companies. There were just handful of bootstrapped company in US. So I got a very clear perspective. And of course, in the end, I had a chat with Sridhar, and that just had a very major influence on our decision. So this is the typical Silicon Valley formula. And this is because of I've had so many conversations. This is just very crystal clear. So first, they just raise lots of money, And this is public information. If you go and look at S1 of a lot of companies that are about to file for an IPO, you would find that by the time it comes to an IPO event, which of course is not really, an exit, I'll come to that later. The investors typically end up holding 75 to 80% of the companies. And say, for example, of Box.com, which is a market leader in the enterprise document storage, the founder, Aaron Levy, by the time they have filed for an IPO, he's left with 4% equity in the company. So equity, when I was talking to Sridhar and he was saying, hey, Paras, even though your company is a small one, I bet you're in a better position both from financial point of view and from a freedom point of view as compared to someone like, Aaron Levy. And it was like a very clear-cut, logical, well-thought fact, which I couldn't argue against. It's not just about 5%, 4% equity in terms of financials, but what's more important is that with, say, if the founders and the management end up having, say, 15, 20% equity, and if the investors end up holding 80% of the company, I just feel it's a little unfair, because the whole team and the whole company, they have spent 8 to 10 years of day and nights of efforts, and investors are getting 80% of the returns. It just seems a little unfair. And that's because, again, combining with the themes of previous speakers, these companies end up needing a lot of money. They would typically raise in the range of $120 million. In fact, our closest competitor, they've raised $90 million so far, and that's why we had so much of inbound pressure from investors. They would always say, this XYZ competitor has raised $50 million, $60 million, you're in the same industry, you're in top 3, go raise money. And when I started hearing this argument again and again and again, it becomes very difficult to ignore that. It takes a lot of conviction to keep saying that my 10 competitors have raised $50 million, I'm going to get crushed in the long run. But this fact was fact. If I had to raise funding, by the time it came to an IPO, I would end up having just 10 or 20% of the company. And right now, we both, me, my partner, and now our whole team, we end up owning 100% of the company, which is like we can dictate our vision. And for Silicon Valley companies, again, this is the second sort of a fact, which is growth above everything else, right? They like growth at all costs. And almost all the companies you just search for SaaS IPOs or you search for SaaS S1, you would find that the companies, you name a company that is on path of doing an IPO, and they've never been profitable. They haven't made a single dollar. And they justify it by saying that we've been investing in sales and marketing. But it seems pretty illogical for me that you have spent 10 years of your life, which is, like 80 years or 70 years, and 10 years of your life, you're justifying something on a lie that eventually you'll end up making money. Like 8 or 10 years down the lane, you'll do an IPO and then you'll make money. And business, fundamentally, if you go by the business textbook definition, they exist to make a profit. So this is a very counterintuitive economics that they're okay losing millions of dollars per per month and month after month. And honestly, at Wingify, I couldn't digest losing money, right? Growth for growth's sake is good as long as unit economics and business sense, but not because you just have to grow at all costs. And this also is a byproduct of the fact that once you get money from investors, they cannot have you keep the money in your bank account. So especially in, say, US, the interest rate on the money is 0%. You don't get money if you're putting money in the bank. So you cannot expect an investor to give you $15 million and say, no, I'm keeping it for the rainy day. They would want you to exhaust that $15 million in next 12 to 18 months so that you can raise next round of funding. I mean, there is no incentive for investors that, hey, you've got the money. They would say, what's next? And what's next is that your burn rate would just goes, your burn rate goes really high, because if you have to spend money, you have to start spending on sales and marketing, you have to hire more people. So this is sort of an interesting vicious cycle that very few companies emerge out of. And interestingly, with VC funding as well, we get to hear the stories of the companies who have raised funding and they do ultimately an IPO. But this is this psychological bias where reporters would never report companies that would raise funding and they would go nowhere. So if 100 companies raise funding and only 10, like Zendesk, HubSpot, and a lot of other companies end up doing IPO, we'll never know about 90 companies whose burn rate was so high that nothing happened to them. So it's important to be realistic of what happens to the company and go through facts. So ultimate goal in this whole Silicon Valley formula is to, in returning investors their money in like 2x, 3x, 10x fashion through an IPO and acquisition. And interestingly, as I read more about the model, I realized that after an IPO, everyone in the management just moves on for another opportunity. So typical with stocks, they have this 4-year of vesting. So the VP, say VP of marketing, VP of engineering, CTOs, these really smart people would come on board. They would wait for 4 to 5 years. And because of that, the company would have to go an IPO, investors would get return. And then you have so many public companies that are just basically existing just like that. And the original founders, original management, they have just moved out because they have made their payday. Again, in my dictionary, I really didn't want Wingify to be that way, because I'm really in this for the long run. I want to create a sustainable organization. I want to create a sustainable business. So this sort of a model didn't make sense. And like I said, the Silicon Valley businesses are made for an exit in 7 to 8 years. In fact, it's so interesting. They have names depending on rounds. There's seed round, Series A, Series B, Series C, Series D, Series A. As like it's a formula, right? A business is not a formula. It's, if you think about, say, Tata, Birla, Wipro, or all other great businesses, there is never such kind of a formula. They persisted because they like doing business, because they like creating returns for the business itself. Not like, hey, this is like a gamble lottery. Let me try my luck for 7 years and I'll see where it goes. So either you become really fast and exit, or you crash and become irrelevant. In fact, someone was saying to me a great analogy, which was like venture funding is like, fueling the rocket. Either you go to the moon or you crash horribly on the earth. There is no middle ground where you are floating and enjoying what you're doing. So it's really a very interesting fact. And like I said, life post funding, I imagine a burn rate would go really high. You can't let company money to sit idle. You have to start spending the money, typically on marketing and hiring more people. And because of the growth of company accelerates, and that's why you see all the market leaders in SaaS, they have to raise funding, and that's how everyone justifies it in the short run. And when I say short run, it's interesting that even for SaaS, short run has been 10 years. And if you think about business and human life itself, which has been continuing for thousands of years, and now business for multiple hundreds of years, I don't imagine justifying this just on the basis of 10 years or 20 years of data. This might be wrong, this might be right, but I'm betting at least my personal money, because I haven't raised any funding, that growth for growth's sake is probably not okay in the long run. And after you raise funding, you have to start preparing for next funding round, since you're burning money fast. So if you raise today, you have to think you have to raise 18 months down the lane. You raise 18 months down the lane, you raise another round 18 months down the lane. So job as a CEO always becomes, when am I going to raise my next round? An ultimate round is IPO. You do the IPO exit. you make some money, and then you wonder, what do I do next? And in fact, this was Sridhar was telling me, he was saying, if you talk to a lot of companies that have done their IPO and they have had their payday, a lot of companies, founders actually regret, because they have this now, maybe, $10 million, $100 million, or even $500 million, but then they wonder, what do I do next, right? I mean, they would maybe start another business, but if you have to start another business, why not just continue with the one which you have such an amazing base? And again, I couldn't really wrap my head around that. So I realized Wingify is very unique, and we don't have to necessarily copy the Silicon Valley formula. It's not visible, but there's all the points I was contrasting that what a typical Silicon Valley company does. And I think the main point I would just talk about is maybe the reason we didn't need funding was because of a couple of reasons. One, of course, was, I was also thinking about what unique advantage do we have at Wingify. I mean, we can't be like best at everything, right? It's just like brash and unfounded confidence. And then we realized our best competitive advantage is being in India. And it comes with a couple of inherent advantages that the Silicon Valley company cannot afford. So imagine starting a company in Silicon Valley. If you are a bunch of 3 engineers, even to survive for say 6 to 12 months, your cost of living is so high that you can't really fund that by yourself. And combining on the fact with, in America, you don't typically live with your parents, you have to at least pay the rent. But in India, what I did was I was just living with my parents. I had my expenses maybe 2,000 rupees per month or even less. And all I needed was a domain, some space, and I could bootstrap the company. So bootstrapping a company in Silicon Valley itself takes so much of money that people had to take. They have no option but to raise funding. And but of course, this doesn't apply to us. We can bootstrap because we have low cost of living, the engineers cost so less. So that was something amazingly unique about being in India. And another thing, even as far as building an engineering company is concerned, Sridhar was telling me, go around in Silicon Valley or San Francisco, the unemployment rate is 0.5%. This means practically it's impossible to find great engineers in San Francisco. So this means that you're competing against companies like Dropbox that have a gym in their office, that have a bar in their office, that have 24/7 massages, whatnot. And just to attract that similar amount of talent, whose expectations is you'll give lots of stock options, you'll give great salaries, and you'll give benefits that'll blow everyone's mind. In fact, someone was telling me a startup is starting to give rents of their employees just to attract. So there's like an arms race to attract better and better engineers. There's just nobody available in the market. But in India, I really admire the Zoho's approach, and that is something also we've been trying to do at Wingify, that this is an opportunity to find such amazing engineers at 1/5 or 1/6 the cost, that it'll be foolish not to take advantage of that. And it'll be foolish to require funding because it just is very cost effective. And it's not because we are paying less. I mean, people say, you cannot pay less, but why not? If a burger costs 20 rupees here and in America it costs $5, which is 300 rupees, this cost of living is different. And that's what we should be able to leverage on, make software from here and pass all the advantages globally. And so Wingify was very unique in that sense. Plus, we didn't really need funding right now. We have enough cash in the bank to sustain. And since it's a SaaS business, and it's the beauty of SaaS business that you have to acquire a customer once and it pays you for a long time, say 12 months, 18 months. So the cash flow always increases. Every month we break our sales record, and now we have just stopped keeping track of it. And so again, just to reiterate, why did I go to talk to VCs again? I would like to stress that I don't hate VCs. I don't hate the VC model. It plays a very important role, say when it comes to a lot of industries. If you want to build, say, rockets and go to Mars, I think you require a lot of investments. If you want to open up some mines, which requires a lot of investments. But for software, at least, I don't imagine for a very long period that you need funding. It's just the cost of producing software could be and should be contained. But VCs are generally very smart people. They're genuinely smart. And not because they're smarter than everyone else, because of their nature of job. Since they talk to so many people, since they track so many of industries, even just pitching them or talking to them can give you interesting feedback and validation or just perspective on your business. And that's just worth talking to investors, even if you don't want to raise funding. And of course, team building. And they have an amazing network, and that was what I was hoping when I was thinking, let's just start a Wingify San Francisco office. There's the future, there's the innovation happening and all of that. And I didn't go to VCs to raise money. Money was an outcome. So our decision was not to raise funding. By the way, this is the exact same presentation I gave to all Wingify employees after I came back. And everybody was just very happy that we were not raising funding. And more than deciding not to raise funding, I think my conviction in Wingify as a unique company, and more than Wingify, the Indian software product companies having a very unique strategic advantage over global and Silicon Valley companies got really strong. I was very convinced that future is going to be in India. And that's what Sridhar also told me. He said, you'll see next wave of billionaires to come out of India and not really from San Francisco and Silicon Valley. Silicon Valley is done for good. There's a lot of hype. If you see TechCrunch, you'll get mesmerized, hey, I should start something there, I should move there. But the practical business reality was here in India because of engineering talent, cost advantages, and just our culture of working really hard. And our mission remains the same. We want to build the most respected software product company to come out of India. And in that way, I'm very happy that we compete with Zoho, although at a very small scale, but from a very admiration point of view, we want to compete with Zoho to bring the Indian ecosystem that India should be known for making great software products. Just like China is known for manufacturing, Japan is known for excellence, and other countries, why can't India be known for making great software products? Just like India is known for IT services. That's just the next wave of evolution as far as I see. And like I said, next 10 years are going to be amazing for India. I'm a lot bullish that amazing companies will emerge outside of Silicon Valley. And I don't want to just call India. India is, of course, very close to my heart. But I want to emphasize that companies will emerge outside of Silicon Valley. It could be Bangladesh. It could be any other countries. Software knows no boundaries. And next 10 years, you will see a lot of stuff happening. And a couple of reasons for that, we already have many emerging software product companies that deliver globally competitive products. We have companies like, say, ourselves, Wingify, BrowserStack, Freshdesk, WebEngage, and numerous others that are emerging and already emerged. And I think we already have role models, not in product, but in services, say companies like Infosys, Wipro, TCS, that have disrupted the IT services and built billion-dollar businesses. In fact, when I learned about the Infosys story in detail, I realized they never raised funding. They were just very efficient at scaling a business. And today they're a $40 billion company employing 100,000 lakhs of people. And that's they did because of the engineering talent we had. So if they could do that in IT services, what prevents us from doing that in IT product? And our current government understands the opportunity very well. I'm very happy for Narendra Modi. He talked to Eric Schmidt and he talked to Zuckerberg as well. Just imagine a prime minister talking to Zuckerberg. And so it's all about future. That's why I'm so excited to be in India right now. I'll just spend one moment to talk about what has prevented India as emerging as software product powerhouse so far. So if you contrast Silicon Valley with India, Silicon Valley has had about 35 to 40 years of cumulative experience in building products. So Apple was founded in 1976 and Microsoft was founded in 1974. And this means today, 2014, is 40 years of history. And when I think about, say, something like company like Google, where Eric Schmidt joined to scale them from just a very college sort of a startup to a global powerhouse. Eric Schmidt previously was CEO of Novell and he was at Sun Microsystems. The point being, in Silicon Valley, there are people who have had multiple decades of experience of running product companies, scaling them to multi-billion. We lack that in India. And the products is just starting to emerge. Zoho was the lone flag bearer, and they're really big and they're growing. And I hope they'll become role models for lots of companies like us. But the product scene is just happening. If today you want to find people who have had experience of taking a company from, say, like $10 million to $100 million, I don't imagine there's a lot of people here who could do that. But some people see that as, a setback, and they said, let's just move to US. But I see that as an opportunity. There's an opportunity genuinely to seed the ecosystem. We can't imagine, we have, say, 40 years of catching up. So we can't imagine that we'll be at the same pace as Silicon Valley in like a couple of years. It's a long journey. Will take, say, at least 10 to 15 years to catch up to that level where we have talent, where we have perspective of building and scaling companies. But if that happens, imagine what a wonderful thing it would be. And again, like I said, the reason I'm bullish on non-Silicon Valley success is there's already lots of examples all around us. Alibaba from China, they had the largest IPO in tech history in US. And they built the company on its own very unique model. They didn't copy anyone, right? And same with Zoho, huge company, both from revenue and people point of view, completely bootstrapped. They did it on their own terms. They didn't copy the Silicon Valley formula. And Atlassian from Australia, they've built their product Jira and Confluence. They are just standards for project management. And they're doing $200 million revenue completely out of Australia, which is, by the way, not in Silicon Valley. So all this is possible and it's happening. And again, but the point is, it takes a lot of time. People imagine and people say, Silicon Valley is where the action is. But to reiterate the point, it has taken a lot of time. For example, Zoho in 2004, like we saw in the history, it was a small company, few products, but Zoho today is just huge revenue, 2,500 people team, 50 plus products. So in 10 years, the amount of momentum they had built is just tremendous. And this is what I was talking about with the team at Wingify as well, right? That if Zoho did that, that's why I said Zoho is a great inspiration for Wingify, that if Zoho could do that, we could do that as well. It's just been 4 years for us, and not to be too bragging, I think these slides got left because I was talking to the team, but just, we have built a good revenue business that has been growing well. We've built a market-leading product. We were called as leaders in the A/B testing industry. So the competitors that you see, we compete with Google, we compete with another company that has raised $90 million, we compete with some other companies that have raised millions of dollars, but still we were called as leaders by an independent research agency. And we also acquired a company which is a US-based company. And finally, this is what I'm most important of, that we've built a very unique culture of 60 plus people that people absolutely love coming to office. People absolutely believe that we can build great products just right here from Delhi. Thank you. So as a reminder, I keep telling my people, it's a long journey, and this is again one of the reasons we haven't taken funding, because I don't want to be in a position that 5 years down the lane, investors are saying, hey, we want our money back, you get acquired, go public, do this, do that. We want to maintain our independence because our mission remains bringing India as a very, as the global leader in making IT products, and it'll be a long journey. Alibaba took 15 years, Zoho took 18 years, Atlassian took 12 years, and I feel for Wingify and a lot of other companies like Wingify, it's just been a couple of years. We haven't had a lot of time to do that. And this is again a point I wrote it because Sridhar mentioned to it, and it was in my latent thought, but it became very crystal clear that you would find a lot of people in Silicon Valley talking about an exit. But if you think about what's an exit, right? An exit for, real exit for humans is just death, if I were to put it morbidly clear. So for an exit for business is just no exit. Apple, founded in 1976, became most valuable company in the world 36 years later. So imagine Apple being, like a company with a very short-term focus. They wanted liquidity or X or Y or Z. They may have just sold for very little, but just because they stuck in for a long, they had their values, they had their team and culture driving it. That's what made them really interesting, really huge. All the interesting businesses in the world, they have taken their own sweet time in maturing. So there is no shortcuts to it. And the Silicon Valley formula typically is like a shortcut formula. I didn't want to follow that. So thanks, that was my perspective. Again, to reiterate, a lot of it, my decisions were influenced by Sridhar, who will be just talking more about it after me. Thank you.